Hello, this is Compound Interest Stock Guy, and today we're going to be talking about the Death Cross with SPY. So stay tuned, and I'm just going to talk about Trueleaf, a company I invested into over a year ago, and I might add some other little bit of tidbits. Absolutely, I will add some more tidbits. I'm going to talk about knowledge in the markets and things that you don't learn until you spend more time in the markets. So if this is interesting to you, then stay tuned. I appreciate it. If you're new to the channel, please subscribe. Helps my channel grow, and I appreciate it. Give me a thumbs up if you like the video. Give me a thumbs down if you dislike the video. And yeah. And before we get into this, I just want to disclose I'm not a financial advisor. Any company or anything I talk about, do not buy or sell based on anything I talk about. Buy or sell after you did your research, your due diligence, and you decide on your own investments. So yeah. So okay, so I just wanted to show this card. I just think it's kind of cool, I guess, to just share little tidbits about my life. So I don't invest into Trueleaf before. Their ticker is MJ in Canada. I'm not sure what their ticker is in America, but they're also have a European ticker. But I think this company is pretty legit as far as being family oriented, and I just think they're doing things for the right reasons. So they gave me this card. I did their crowdfunding. I invested about $900 into this company for 1,273 shares at 70 cents. But some of the shares I've given away to my family members for Christmas presents. So, but they gave me this card. They said, returning the love to you. And then this is a picture of some of their dogs that's part of their team. And then it's got on the back their address, and I think that's pretty cool. They gave me a card, and they also gave me this certificate. So yeah, it just says how many shares I get, and it's pretty cool. It says the CEO, he signs it, and it says it's not a legal document and is not valid for exchange. I've personally already got those shares deposited into my account. They've been in my account for over a year. And then there's this card. It says right here. So I'm gonna read it to you. It says, "Welcome to the Trueleaf family. On behalf of our team, I want to thank you for investing in our company and believing in our vision. We are excited about a future of good health, of living longer, better, happier from the power of whole plant medicine. A big part of my passion for this company comes from these two characters, Molly and Scout." So I think that's what those two dogs are right here, Molly and Scout. They are the real stars who helped us surpass our goal of 10 million. I've been lucky to spend a big part of my life with four-legged companions, all of whom have a special place in my heart. The bond we share and the unconditional love that I have experienced is part of the reason why our tagline, "Return the Love," means so much to me, to our team, and you. If you've had a special pet in your life, you understand what I mean. Now that we are working hard to build the foundation for a purpose-driven, conscious company that will make you proud to be a part of, we plan to share our progress with you every step of the way. Stay tuned. We'll be in touch again soon. Thank you again for your support. It means so much to us. Darcy Bomford, founder and CEO. So I think that's pretty cool. I mean, I don't think you get that from a lot of companies when you get involved into an investment. So I also got hemp pet shoes that I gave to a friend, to my friend's dog, and I also got a bandana I'm not sure what I did with the bandana, but yeah, I mean that's pretty nice. So yeah, and yeah, I mean basically the companies, I think they're really on the right track right now. Just with the hemp pet food, I think it's gonna be a very big market, and they have Lululemon, uh, old like a old marketing person. I think I'm not sure exactly who it was that worked for Trulieve, but someone on deck that worked with Lululemon. So Lululemon's a household name as far as getting some of those pants. Women buy pants Lululemon all the time. So that's a company that's been it's grown very strong over, I don't know how long they've been around, but yeah, and their branding is awesome. So I like that they have someone such as that caliber working with them, as well as someone who did the branding for Mike's Hard Lemonade and some other branding. Like he's just a branding specialist. So I think they're on the right road. They just got distribution into over, I think it's 3,500 stores globally for True Leaf Hemp. So yeah, I mean it's pretty awesome. I think the company's gonna go places. So yeah, I don't know. Just wanted to talk about them for a bit, just to switch things up. Just talk about that stuff, and yeah, so it's pretty cool. Now let's talk about the Golden Cross. I'm talking about this stuff in the other video that I made, but this is gonna be a shorter version, and it's just basically the fact that it's because I'm also gonna just talk about it on a gut level, because this stuff really is tough to deal with, like on a psychological level, like for investing if you're new to the game, because like you can see, like say like October, like end of September, the market just dropped. So it just went down from 290 all the way down to 260, and then it's like it gave people the thought that it's going to go back up. No, double bottom again, and then just bottom crazy. And that had to do with rate cuts. I mean, rate hike. So when there's bigger interest rates, people want to spend less, and it affects companies as well. So, but you just see this, like you see this. This is called a death cross. Death cross. It means things are gonna go down. Cause see, this is a double bottom right here, right? And now that I'm looking at it again, I couldn't really figure it out, because the more you look at this chart, the more things you understand. It's just like trying to read anything. It takes time to really get the nuances. But basically, you look at that and just get down. Like I just was so surprised that the market took such a toll right there, right? And yeah, that was a big move. I mean, I was thinking it was gonna go down below like 190. I was like, what am I gonna do? I'm gonna sell out of all my positions. I didn't want to sell out of my positions, because the thing that's kind of scary about that is trying to sell out of your positions. What happens if it goes up right after you sold out of your positions? What happens? So it's tough, I mean, mentally, to think about that. I think personally, if I ever see a death cross again, I will absolutely sell out on 75% of my positions, because that's telling me a warning, a big effing warning sign to get the F out of the market. And yeah, I mean, it's just not worth it to lose that amount of money that you could have saved by getting out of the market. And but now we're seeing this is called a golden cross, where it's hitting and it's like on the way up. So I don't know, it's going to be very interesting in the next couple of days. I'm going to be honest with you guys. It's going to be really interesting, because it's just hitting. I wish these numbers were out of the way so you could see it a little more clear, but it is hidden. You can see it if you look on your broker account and you go to the SPY. just check it out. It's basic. It's just touching. Like I saw it today, and it was wild. But what that tells me is if the orange goes above, see back here in 2016, if it goes above the 200 moving average, well, then it's going to be bullish for a while. So, I mean, that's pretty much what's going to take shape. So there could be a lot more bullish sentiment in the market in the next coming days. But yeah, I mean, I'm not sure. I'm just going to watch it very curiously because, I mean, it could go to the downside. It could be another death cross where it goes below. It's very scary. It would be honestly, I think if this happens, if it turns out to be a death cross and it goes down, then this will be below. I think it'll end up going a lot lower than it went here. So I don't know. I'm just gonna pray. But basically, in the market, there's a lot of things with panicking and getting out of your position. So sometimes in these companies, say it goes to, say you buy a stock at 25 cents and it goes to 60 cents and then it drops down to 50 cents and then everybody sells their positions. What happens is the institutions buy up all those shares and then they pump the shit out of it and it goes to $2, $3 or something like that. And you're left not with those shares. So people need to be aware of things and be aware, and that's why I am trying to adapt and use the scale in, scale out approach. So if you were here and you were kind of scared, you could buy some stocks right here, but like look at it though, it still went down from there, you know. So it's like, what do? You buy some shares. My brother, he's not really like a chart reader, but he just buys average. Like he buys average like every month or so. He'll cost average. So say you buy 1,000 shares or like $1,000 worth of shares in January, and then you also buy $1,000 worth of shares in February, and then $1,000 worth of shares in March. I mean, there's different strategies, different approaches. It kind of gets down to the nittiness of what works for people. You know, what's their comfort level? Because if you do a cost average basis, you're not going to take too much big upsides, but you're also not going to take too much bad downsides. So you're going to be like more consistent. But I don't know. It's hard. It's hard because I'm not like I've just gotten over the fact like trying to be consistent. Like I've never really tried to be consistent, but as far as trying to be consistent, it doesn't really like matter that much to me. I just look at it as in though when I'm in the market, if I put like say 10,000, just give a random number, and over 5 or 10 years, I turn that into 100,000. That's like a 10 times gain. I don't really care that much how I got to that level. I just want to get to that level. I'll do any types of strategies to get to the level because I'm a determined mofo and I just don't give a shit. I don't give a shit. Like I do, but I don't. It's just basically there's so many different ways to reach that destination, and if I have to try to do like more risky plays at certain times, like I don't like to be too risky, to be honest. I don't. Warrants for me are extremely risky. Call options, put options are extremely risky for me. I'll invest in the hundreds of dollars like when I'm start doing those kind of things, but like I'll have like a bigger position for warrants. Like I'll maybe put like in the thousands of dollars for warrants because I look at the upside. For say like for Harvest One, I bought 125,000 warrants at 2.5 cents, and right now they're trading for about 6.5 cents, and there's a potential that those same warrants that I paid 2.5 cents for can reach, say, like 25 cents, even $1, maybe even $1.50. I mean, maybe even $2. Who knows? I'll tell you why, because they got a great CEO. I'm not telling you to buy Harvest One or not. I'm just saying though, this is just investing psychology. I mean, it's a game. It's a game. You gotta be. I mean, when I look at these stocks, I look at their balance sheets. Pretty much 99% of the times, I invest into companies unless they're a penny stock and they haven't made any money. Then I just look at their future plans, because you can't really expect a new company to have good revenues. That's just the name of the game. Eventually they'll get some revenues, but basically they haven't reached that level. But if the company's making revenues, then I'm going to look at their balance sheet, and I'm going to look at what they're expending, how much and what their growth revenues are. And then I need to do my research on their investor presentation. I have to look at how many kilograms are they expected to grow. And that's like a hard thing to deal with in this cannabis space, because all these companies falling short on their expected kilograms that they're supposed to grow. So like, for example, Aurora and Canopy, they're all talking about like 500,000 kilograms. Well, did they grow 125,000 kilograms last quarter? I don't think so. So that is the dealio, is basically you need to have a safety net. So like, for example, if I bought into this company, say, let's just look at what this company is going for. Well, this isn't a good company. I mean, it's a good company, but this isn't a good way to gauge, and it doesn't even have the market cap. But let's just say a company has a market cap of 100 million, right? So they got 100 million market cap, and so they're expected to grow 20,000 kilograms next year. And if they do that, and say they sell it for $5 per gram, well, they're going to do $100 million in revenues when they sell all their cannabis. So now you put it in, if they execute on that, then they're going to make $500 million. No, I'm not. 10. Okay, I forgot what I was talking about. But if it's $100 million company, 20,000. Yeah, they do $100 million in revenue, then I would look at a 4 times price to sales ratio. So that would make them worth $400 million. So that gives them the ratio that they should be making, that they should be at a 400 million market cap minimum, because these companies are going to get higher valuations than that, just because they're running on really high growth. So that's what I look at. And then another thing too is, from quarter to quarter, you have to look at their revenues and be like, okay, that's good, that's bad. And you have to examine, and then you'd be able to be like, no, they're not executing, they're not getting close, they're not going to reach those levels for the longest time. My money's better spent somewhere elsewhere. And that's where you gotta have that discipline. It's really hard. It's easy to just sit back and hope and pray, but hoping and praying doesn't work. Sometimes it might work, but where your money lies, for myself, at least that's for myself, I want my money to work for me. So I'm in growth stocks. So if these growth is really nice and the company is able to get to execute to where they're at, and so like I look at it, but the longer, then you got to look at just little small intricacies. So say some company they're supposed to do like 40,000 kilograms, but they do like $3.5 million. Well, how much kilograms did they sell like last quarter? Like maybe 700, 800 kilograms. That's like 2% of a year what they're supposed to do. So when are they gonna get to that level? You gotta detailed. Like look at that. I mean, not a lot of people are gonna be disciplined enough to do their homework, but that's what I'm doing, and I hope it's gonna pay off for me. I mean, sometimes all you effing need is luck. Straight up. Sometimes all you need is luck. You know, you don't have to look at that shit. You just have to be like, okay, I like the name of this company, so I'm gonna invest $10,000, and somehow it just goes to $60,000. But you know what? That's not gonna help you out in the long term. No. Part of winning is losing. Part of winning is losing. It is. And what it is too is when you lose, you have to look back. You have to look back and be like, where was I off? And then you have to say, okay, you know, I need to reevaluate my games, my strategies, because I'm not doing things right. So I'm just gotta fix it up. And then you put your money where good things are, because you're gonna find it. You like, if you do your research and you do your homework, you're gonna find a place to put your money that's safe. And if you don't find it, that's okay. You don't need to put money into the market. You don't. There's always gonna be an opportunity. There's always opportunities in the market. I mean, there always is. Sometimes there's better opportunities than others, but you don't have to rush into investing into a stock. I mean, you let it come to you. If you like a company at $7 and you're like, I don't know, I want to buy this company today. Well, sure, you can buy it today, but you don't have to buy it all today. You don't have to put, like, if you have $10,000 in your account, you don't have to put a $10,000 straight up on that stock that day. You could put $500 or $1,000 and then look at it 2 months from now, or 3 weeks from now, or 6 weeks from now, and say, like, where is it trading? And then you can be looking at it and then be like, okay, it went down to $4. I still like what the company's doing. It looks good. I'm gonna put another $1,500 into it. I'm gonna put more because it's lower. Because what Warren Buffett does is if he likes cheeseburgers and he could buy them for $1, one cheeseburger for $1 today, and then in 2 months he can buy 2 cheeseburgers for $1. Well, he's gonna buy even more cheeseburgers for for $1. You know, he's gonna buy way more at that time because the value's there. Why buy when it's at the top? You don't need to rush these things. You don't need to put all your money in the line for this stuff. A lot of this stuff is risk management and money management, you know? Your money, you worked hard for it and you have it on the table. You don't want to put all your money at risk of losing it, because the market can take from you as fast as it can grow, you know? So I don't know. This is just gonna be my video talking about this stuff and rambling on and getting the gist across about psychology in the markets. I mean, I can't talk about everything. You know, it's gonna take time to get your mind up to rates. And the thing is, sometimes people be like, okay, I'm so on top of the world. You know, I put $10,000 and I turn my account into $70,000. Well, then once the market changes and it turns from bullish to bearish, they don't know what the fuck to do. They don't know the up from down. So that's why you need to be like humble, and you gotta learn that, yeah, maybe the market's working for me today, but in the future maybe it's not gonna work as good. So you gotta tread water in different waters, you know? Sometimes the water is easy to tread in. Sometimes the water is not as easy to tread in. And it takes a lot more, there's a lot more resistance. And you got more fight for that upside to stay treading. But the longer you adapt and you learn different circumstances, you're going to be a better investor and a trader in this game. And yeah, I mean that's what I'm putting out. That's what I'm saying, and I hope you guys learn a lot from this video. Um, that's the real. I Another thing before I jot off is don't be so quick to follow what people are investing in. Don't be so quick to follow what people are investing in, because just because someone's invested in it and they're telling you to invest in it, you don't know when they invested into it. Did they invest into it at $2 and now it's at $15, and you're gonna invest it into at $15? Maybe like re-examine yourself. Realize like if if I got into the company at $2 and it's up to $15, you think I'm gonna be a little more happy about the company and then be a little more like optimistic about the company than somebody that's getting in now? Of course. You know, I mean, people are biased creatures. I can be a biased creature, I'm not gonna lie. If if I love a company and I'm invested very deep into that company, you think that maybe I'm not going to be more optimistic about that company and tell people like, yeah, buy that company. I don't tell people to buy any companies, but I'm just like say like what I own or whatever, and be like, and then like what I like. But just because what I like doesn't mean that when you're buying it right now is a good time to buy. So this whole investing community needs to become more independent. I mean, you don't need to be fully independent, but just use your brain. I mean, use your brain and realize things, like think outside the box. Don't be a follower all the time. You're going to get crushed in the end. You might have a good couple years, but you're going to get crushed eventually, I believe, if you have a follower mentality, because you just have to be smart. You have to be fluid. You have to have a real sound, a full awareness of the market, because you might have a good few years, a good few months and stuff like that, but markets change. And that's why I may not be the best investor. I may not have the best gains in 2018 and 2019, but I'm gonna learn from my mistakes. I'm gonna learn from my mistakes. I'm gonna look back on my mistakes and I'm gonna say, what did I do wrong and what did I not do right? You know, and how can I fix that? So I'm looking at the SPY now, and things are getting a little scary. And yeah, I'm really watching it very closely. I'm not getting complacent, and yeah, I think that the future is going to be bright for me. And I don't know. I just basically look at that you learn more from your losses than you learn from your wins. And if you can take something from this video, I hope you do. I hope you learn something. And yeah, until give me a thumbs up. And until next time, peace.